All right, so when we start looking at the market, right, when we start looking at a pair like AU, okay, the first thing that we have to identify is what kind of market are we in? Are we in a downtrend? Are we in an uptrend? Are we in a consolidation or moving sideways? What market is this? Somebody tell me what kind of market are we in? We're in right now. Range, correct. We're in a range right now. We're moving sideways, right? So we're just coming off of a downtrend right here. We're just coming off of a downtrend, and now we're moving sideways, right? So we know that because we're moving sideways, we're basically waiting and trading from either support or from either resistance, right? It's the only things that we're trading, that we're able to really trade right now when it's ranging, okay? So it's ranging, all right, so we know, boom, we have, this is our market here. You can draw a little box around it, and we know, all right, cool. So now from here, we know that we're only dealing with buying and selling at support or resistance. Okay, so now that we know that, what we need to do next is we need to go ahead and identify what are going to be our support and resistance. What's our support and resistance? Okay, and we only want to concentrate on the current market. We're not worried about what happened 3 years ago. Okay, we're only worried about what's going on currently, where the market is going currently. All right, so I'm just going to drop some support lines real quick, and then I'll adjust them in a second here. So we know that we have some good support here. The reason we know we have some good support is we have multiple touches here, multiple touches there, right? So we have those touches there. So we know for sure, hey, we got some good support in that area there. All right. So what's going to be our next area of let's just say resistance that we can put up? Okay. The easiest thing to do would be just to go to the very top, right? To go to this top here. All right. And where are we going to put this resistance? Okay. Can we put it up here? Do we put it here, or do we put it here? You know, where do we put it at? Well, I'm going to say that we put it here in this area. The reason why is because this is the area where we have the most touches. Okay, so we have touches all through here, here, here. We have a fake out here. We have touches here. We have another fake out here, touches here. Okay, so all these touches that we have, I like to put it in the area where we have the most touches. All right, so now we need to find the channel of where this is going. Right, so we've got our basically our ceiling here. We have our floor here. Now we need to find the channels. Okay, so now what I'm looking for is, where does price get stopped out at? You know, where are some areas that price is having issues with getting past? Okay, and right now it looks like this potential area here is an area where price seems to get stopped out at. Okay. We have basically price that comes down right here, gets stopped out. Here, gets stopped out. Comes up here, gets stopped out. Comes down here, gets stopped out. Here, gets stopped out. It almost reaches it here and returns back. Almost reaches it here, returns back through this area, through this area. Okay. And we even have, it stops in this area as well. All right. So that's going to be my next area there where I would put it. And then now you can see that I have basically price that moves in between these two channels from here to here until it breaks it. And even when it breaks it, it comes right back up to it, retests it twice before it drops down again, right? And then comes back up, gets stuck here, goes sideways, and then it goes ahead and continues up. All right. All right. And then is there any other channels that we can potentially put for this line here? The only other potential channel that I see is area, at least, is right here, and it's very minor. But it is an area because there is multiple touches. We have price gets rejected here, price gets rejected here, price gets rejected here. And then price does struggle in that area as well, where it gets rejected, it breaks it, comes back down, and then respects it and comes back down again. Okay? All right. So that's basically going to be our support and resistance for AUD USD. Okay? So what are we looking at now as far as potential trades, right? The only thing that we're worried about when we talk about a market that's sideways is we're only worried about either buying at support or selling at resistance, right? And so right now, where is price currently at? Price is almost at, resistance. It's not really there yet. And we're not getting, very, very much of indecision here on this chart. So what I'd like to do then is zoom into the area that we're talking about, and then we're going to start going back in time. So we're going to start looking at the other charts here. So we have the 18-hour chart, and then we have the 12-hour chart, and then 10-hour chart. And you can see that as we start going down in time frames, you'll start to see minor support and resistance areas, like this area here and this area here. You'll see smaller channels where price is moving between, right? And with this particular pair, we're not essentially moving straight up, right? We're literally just taking a long sideways cruise until getting up to the top. So it's not like this move here where it's going straight up. It's literally just going sideways for a very long time before it actually reaches that. Okay. Now, whenever you see that, okay, it could potentially mean one of two things. Number one, it's going to be basically it's not going to be a move that does this. It's going to be just a move that keeps going up and breaks it. Okay. Or it's going to be a move that just goes sideways, and once it gets to this resistance, it's going to get stuck here, and it's just going to keep going sideways right at that line for a while. Okay. So one of those two things is what it's going to do. Okay. So we can only think about trading this pair if it gets a little bit higher into our zone. Now, potentially, if we look here at these candles, this is what I'm talking about here, is that the fact that it had indecision, and then it had a bearish candle that moved down, right? So this would tell you, hey, the sellers are in control of price now, right? Well, look what happens, the next, 20, 30, 40 hours. It moves up. and then sellers move it back down, and then it moves up again. Do you see what I'm saying here, where price seems to like just not move at all from this area? It just gets stuck in this area here. So seeing that price is literally just getting stuck through this area, this is not something that is tradable at the moment right now because of that. Because nobody's is taking clear control of price. Okay. The only thing that you could potentially do in this area is try to scalp this area here on a very lower time frame, like a 30-minute, hour, 15-minute time frame. Okay. That's probably going to be your best bet if you're really intent on trading this area. I am not interested in trading this area. I'm interested in trading above this area or when it comes below that area, because that's where you're going to make the money. You're going to make the money once it breaks this or once it breaks down. Okay? So that is so far what's happening on AUD USD. Okay? Now, another thing that you can do on this is you can draw a trend line to kind of help you, right? So if you draw a trend line, you can basically draw it from down here if you like, and just go straight across like that. Now, if you notice, we just drew a trend line there, right? That's going straight across, and then we have that resistance up there, and price is essentially just moving between that. What do you think is going to happen as it continues to move? It's going to continue to squeeze until it finally breaks up or down from that. Do you see what I'm saying? Just by drawing the trend line, we now have a wedge here. And price is moving in between that wedge. And all we're basically waiting for is for it to finally break that wedge. So then we can put in a trade to take it either down or either up. So this would be the trade that you'll be looking for, is once it breaks that wedge. Does that make sense to everybody? Does anybody have any questions about that? All right, so that right there is literally what I would do to break down a chart. Keep it as simple as possible. Keep it as logic as possible when you're looking at something. Don't think of where. Don't base any trades off of what you think is going to happen. Base your trades off what's actually happening in the market. Okay. Don't base your trades off what you think is. It has to go up. It has to go up. No, it doesn't have to go up. It can go very easily go down. You know. So trade what you see, not what you think. Okay. Let's go to, somebody said USD JPY. All right, so let's get rid of everything here. And I am literally going to do the same process again. I'm going to just draw some quick. I'll do Mexico next. I'm just going to draw some quick support and resistance lines. And this is going to be a little bit more This pair is a little bit more harder to draw because that's all you get right here, right? So you may need to drop down to, like, let's say a 12-hour chart, so you can get some of the more, structure here, and that would potentially help you, draw some actual support and resistance lines. So if you need to drop down from the daily to, like, let's say a 12-hour or an 18-hour time frame, then go ahead and do that, so you can you can get better structure to help you draw in some support and resistance. Okay, so all right, so we have our ceiling here, we have our floor here. Obviously, we have multiple. You have the touches here, and we see that price did come up here, get rejected, came up rejected, came up rejected, and then now it's approaching it here again. I drew this one. Obviously, we have rejection here, rejection here. That's going to be our ceiling. And then as far as this line here in the middle, we have rejection here, we have rejection here, rejection, and then we have false breakouts, rejection here, false breakouts, and we get stuck here. Okay, so that's why I drew that line there. Okay. All right, and that's essentially going to be it for this one. I don't see, you could draw one more if you really, really wanted to, potentially here around this area. Reason you would draw that if you wanted to there is you have 1, 2, 3 rejections from that area, and then you have price coming up and retesting it here. Also, price came up and retested there, and price did struggle in this area as well. Okay, so those are all areas that show a lot more touches than just 2. Okay, so now that we have this here, what do we have? What are we looking at? So when I look at this, I look at, number one, are we in an uptrend? Are we in a downtrend? Or are we moving sideways? What are we looking at here? Somebody tell me, what kind of market are we in? Uptrend, downtrend, sideways? So Robert, you say downtrend. Downtrend, okay. So what makes you guys think that this is in a downtrend? Just give me one quick thing that would make you think that this is in a downtrend. Lower lows, okay, very good. So it's basically creating these lower lows here. Right. So this particular pair here, if we look at it, we're looking at here it created and I mean barely created a higher high. And then it went down here and created, what did it create here? It created a lower low, lower high. Actually, it did not create a lower low here. So this is actually actually no, this is a lower low. This is a lower high, lower low here. You notice how it did not create a lower high here. It just created another low. It just kept going lower. This is a lower high. This is also a lower high because it barely missed it. This is the lower low, lower high. This is not a lower low. This is a higher low. This is a lower high. So do you see the inconsistent? So we were definitely in a downtrend from this section here, right? As soon as we pass this though, and we failed to create a new lower low, now we're in consolidation, right? So from here on out, this is consolidation until it creates a new lower low. So basically it has to pass this line here and create a new lower low, right? And if it can do that, then we're back in a downtrend. Because we have to have the entire move, right? So we have to have lower highs and lower lows, okay? So right now, this second, this is moving sideways until it creates this lower low here. Once it does that, then we're in a downtrend, right? So the question is, if you guys, I don't know if you guys have been watching, USD Jappy or not, but essentially this has been the biggest barrier for USD Jappy right here. If it breaks this barrier here, look to the left. Does it have anything at all here that can stop it from going lower? Is there anything at all here? There's nothing but open space until you get to down here. So you're talking about a massive drop. If it can get past this line where it's had trouble passing it this entire month, and it hasn't passed it, has not been lower than this line since November of last year, right? When it was going straight up, when it was going on the uptrend, right? So right now, any trades that are available here for this pair is going to be once it gets to that line, whether it's going to be a sell or whether it's going to be a reverse to buy. Okay. Now, another thing that you want to look at as well is the 200 EMA line. The 200 EMA line is very, very powerful line. It acts as support or resistance, depending on where it's at, right? So for whatever reason, anytime that price gets down to that area of a 200 EMA line, it's like it is hitting a brick wall and it gets rejected, okay? Now, if you look, it's coming right up to the 200 EMA line, which is right where support is. So if this is going to break it, right, if this is going to break down, it's got two obstacles to get past. It's got to get past the support level, okay, that it hasn't broken since November, and then it's got to get past the 200 EMA line as well. So those two things that it's got to get past in order to break it, okay? So what is the likelihood of that actually breaking? And we're talking about the value of, and also we're talking about the value of the dollar as well going down, okay? So what's the likelihood of all three of those things happening? You know, it's very unlikely for all three of those things to happen, right? So it can happen, it can certainly happen, but it's highly unlikely for it to happen, right? But you always just wait until it gets to this area and wait for indecision to start forming and wait for buyers to take control of price. Once buyers take control of price, then you could potentially have a trade to the upside. And the trade, the type of trade that you'd be looking at is a real simple 2-to-1, you know, risk to reward type of trade. And the good thing about it is that your risk can be very small because you're already at that support line. Depending on how far down this comes down to test it, you know, you'd be looking at a good trade no matter what, right? And this is, of course, you know, speculating that this is going to reverse once it gets here. But, you know, just by looking at this, you can see that you can easily have a 2-to-1, you know, risk to reward on this trade. And, you know, it's going to be adjusted according to, you know, how far down it comes and tests and how far down that wick is for the low. So if it's not a very strong wick at all, then you'd have a shorter, you know, risk, and you would be looking at a 3-to-1 or 4-to-1. I mean, it really just depends on how this plays out. But you can easily see that you can potentially have a good 2-to-1 risk reward ratio on that trade. Okay. Another thing that you can do is you can just draw a trend line, just like that, you know, and even with that trend line there, let's just say you go up to the trend line. I mean, you're still looking at, you know, depending on how this plays out, you could potentially still get a 2-to-1 risk reward ratio, even if you just play it safe to the trend line. Because if you look to the left, you know, there's an area here that struggled. There's an area here that struggled. You know, you see these spikes here. So this area here does have price stalling out on it, right? And if it does reverse and comes back up, it hits that trend line. Where are we at? We're in that same area. So if we're expecting it to, let's say, hit that trend line and come back down, all we care about is getting our 2-to-1, you know, risk reward ratio, which we can get depending on how this down here plays out. But we know that we have an area, you know, that acts as some form of resistance here that could potentially stop our trade from continuing forward to up here. And then we also have a trend line as well. Does that make sense to everybody? Anybody have any questions about that? And if you look on here as well, if you use this as your support and you have your trend line, you have a similar situation with, you know, AUD USD where, you know, price could just form a wedge here, and then it's either going to break up or break down. So that's another, you know, this is another quick little wedge here that you just created. And, you know, if price can follow that, you know, boom, there's your trade that you're looking for right here at that point. The 200 EMA line, it works best on higher time frames. So it'll work just fine on an hour. Anything above an hour, it'll work fine on. Anything above an hour, it'll work fine on. With some of the strategies that I have used before pertaining to using the 200 EMA, where you would essentially verify it on, like, let's say a daily, and then also verify it again on like a 4-hour, right? So right here, what this line here tells you specifically, right? It's not moving. This is just an example, of course, but you see it's got a curve up, right? It's not potentially just moving straight sideways, right? So it's got a curvature of still going up, right? So it would tell you that's still technically in an uptrend. Well, what if you compare that to, let's say, a 4-hour chart? You see on a 4-hour chart, it's doing the complete opposite. It's strictly moving sideways, right? So one of the strategies that I have in our Facebook group pertains to checking the strategy of, or checking the EMA lines on a daily and 200, and if they match. So let's say that let me give you a better example so you can know what I'm talking about here. So let's take a look at this. So you see the CMA line here is going up, right? Well, if you look at it on the daily, here it is on the daily, right? Is it going up as well? It is, right? So because it's going up both on a daily and a 4-hour chart at that time, then you can use that as a confirmation of it being in a uptrend, and you can essentially trade the reversals. So it would allow you to basically, now that you have confirmation off of the 4-hour and the daily with the EMA line going up, that tells you, hey, I am in an uptrend, and I can go ahead and start taking buys here, buys here, buys here, a buy here, a buy here, once the retracement is done. So as long as it keeps, both of them on the 4-hour and daily, say the trend is going up, then I can just keep taking buys and just buy the retracement. So price goes up, comes down, I buy here, goes up, makes a higher high, goes back down, I buy here again, keeps going up. So I just basically keep buying once the retracement is done. And so you keep doing that until essentially the trend is over. That's one of the free strategies that's available on our Facebook group. That does work. That's one of the ones that I used when I first started trading. It was very simple to understand, and it was just simple to use. But yeah. Cool. Does that answer your question, Gil, by the way? You can totally use it on any time frame, as long as it's the higher ones. Anybody have any questions on drawing support and resistance? Is everybody comfortable with support and resistance? Is everybody comfortable with drawing trend lines? Okay. That's a good question, Gail. I would say they have equal weight to each other. Me personally, I use more of actual support and resistance. because I know that those are areas that price has proven in the past to stop and turn around at. Um, I would use trend lines more as second or third forms of confirmation to help you, right? And it helped me in the beginning to draw trend lines because I didn't quite know exactly where I was drawing out support and resistance when I first started trading. So I used the trend lines more because they were just easier for me to draw and understand. You know, I knew that if I was drawing a trend line from here, across like this, I knew that, as soon as it crossed it, I was in a pretty good position to sell it. So if I were to draw a trend line like this, I knew that, hey, as soon as it crossed that, I'm selling it, and then as soon as I would sell it, I would start drawing another trend line like this, right? And I knew like I would sell here, and then as soon as it would get close to here, I would get out of the trade. But then as soon as it crossed this trend line, I would buy the trade again, and then I would draw another trend line across like this. And then I knew as soon as it came close to that, I would get out of the trade. And then as soon as it dropped below it, I'd sell it again. And that's essentially how I started trading, was just drawing trend lines like this back and forth, back and forth, back and forth. And that's how I started trading. But it gave me more confidence because, there was something that I can use that was easy for me to understand, that would allow me to get into a trade and be, more confident in the trade that I was getting in. And with these trades, I was happy with just 20 pips, at a time. I wasn't trying to get 100 pips or anything like that. I was literally just getting 20 pips and I'd get out. 20 pips, get out, 20 pips, get out. And so I would do like 20, 30 trades a day like that on different pairs, and that just helped me get some kind of trades going in practice. And then while I was trading this, then I went back and studied, where to draw, what constituted a good support and resistance line, and how to draw them correctly, So when I was, so if I would to just draw, a resistance, I would know that all I'm basically looking for is I'm looking where areas get stopped out at and areas that get stopped out for going up. And that would be a good line for support and resistance, because these prices aren't going any lower. These prices aren't going any higher, right? And they just happen to be in the same area. So I knew that this right here would be my area for support and resistance. Well, once I started, correctly drawing them and things of that nature, then I just started using that. And I would get into much, longer trade situations. These trend lines here would be, more on like the hour, 15-minute chart and stuff like that. Any other questions regarding trend lines, support and resistance? Any questions with pendants, flags, or anything like that? No questions at all? All right. Someone give me one more pair. We'll do one more pair, and we'll break it down, and that'll be the last pair. Flags. Okay. What questions do you have about flags? Okay, so flags. I think you weren't here yesterday, if I'm not mistaken, but flags are essentially like this. Flags are basically it's basically this. So you're looking at price that goes up in an uptrend, right? And then it gets to a certain area where it just starts to consolidate like this until it finally breaks out again. Same thing here. It's just coming down on the downtrend, and then it starts to consolidate before it moves down again. Okay, so these flags, you basically see them from downtrends or from uptrends. So that's the easiest way to identify them is you have an uptrend, the uptrend takes a rest, and it starts to consolidate, but it starts to consolidate going down like this. So it's not like it does this and consolidates sideways. There's an uptrend and then it consolidates down like this. So that makes a flag, right? And then once it's done consolidating, it breaks up to the upside. Same thing if it was going down. The important thing is to keep in mind that these flags, they consolidate going up before breaking down again, right? So that's what creates the flag. With pendants, it's the same thing. The only difference is that with pendants, we're talking about a move to the upside, and then it's actually gradually getting smaller like this before it breaks out up or down. And that's when you have the actual shape of the pendant that's like this. And that's what I was showing you on AUD USD and USD JPY is the wedge. It's the consolidation part of it is different. So it's not just consolidating evenly down like this, right, to break either up or down. It's basically consolidating in a way to where it creates a wedge. So it gets smaller, 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 until it finally breaks out somewhere, either up or down. But essentially you can draw these triangles on it, and that creates your wedge. So if you can identify these, like when price is over here, right, and you can draw them out, that way you're already paying attention to it. So you're waiting for that break to happen. And as soon as that breaks happen, that's when you want to get into the trade. As far as when you get into the trade, let's say on a pendant here, you're getting in. If it breaks up, you're getting in here. Your stop loss is down here. And as far as your take profit is, you basically take the distance from the top to the bottom of that, and you basically move it to here. It's a basically one-to-one move, right? So you can take the length from the top to the bottom and just move it here. Or if you would just want to be on the safe side, an easy thing to do is you can just draw a line straight across and just trade that right there. That easily gives you 2-to-1. either way down. So you can just take one of your lines here and just draw it across from the top or the bottom of it and just straight across. And that'll be a lot safer. That'll still give you a 2-to-1 risk-reward ratio. On a flag, so on a flag, you're essentially just getting in here. And then your stop loss, it's going to be below the actual line here. And then as far as your take profit, same thing. It's a measured move. So it should be a 1-to-1 measured move from here to here. So you basically measure that out and you would take that to the next flag. Does that make sense? Any other questions on flag or pendants? Cool. All right, so Rob, you said USD Mexico. All right, so USD Mexico. First thing you should know about USD Mexico is that if we look at it from the monthly chart, this is the entire currency since the beginning of 2009, right? What is one thing that you see in this currency since 2009? It's always gone up. It's always in an uptrend, right? It's never technically been in a downtrend, right? So that's the first thing you should know about USD Mex, right? As you get down from monthly to, let's say, a weekly, you can see still in an uptrend, technically, right? This is all just a retracement so far, right? So all this is here is literally just a retracement, just like this was, right? Just like this, just like this. Technically, it's still an uptrend. You go to the daily. And what does daily tell you? Daily, you're still in an uptrend, right? You see how this is a good example of that 200 EMA line. Do you see how powerful that 200 EMA line is? Look at this. See that? So that right there should tell you how powerful that 200 EMA line is. Because throughout the whole history, it follows it. Gets down to it, moves, gets rejected, keeps going up, right? So recently, I'd say for the past 2 months, this pair has been in a downtrend. As you can see here, it's been in a complete downtrend for the past 2 months, right? So technically it's called the retracement, right? Because it still hasn't broken the low here for it to be downtrend, right? And it's right at the EMA line, which the EMA line still reads it's an uptrend. So if it breaks this, then, I mean, you can see that once it breaks this EMA line, I mean, there's not a lot of stuff that's stopping it, right? We have certain areas, you know, that could potentially pause it, but I mean, we're literally talking about, you know, kind of a free fall, you know, and the move that just recently happened here, that right there, that happened because the banks in Mexico want to improve their relations with other countries, their trade. They're tired. They're really tired of their peso being so undervalued, right? So the peso has been taking it for the last 7 years, and apparently they are tired of it. So they're wanting to do a lot more trades, a lot more openness to trading with other countries. And especially with the whole wall situation with Trump, if Mexico is going to pay for it, well, guess what? Their currency has to have more value if they're going to pay for it, right? So for the past 7 years, the dollar has been, you know, outgrowing the peso by miles, right? Now, if Mexico is supposed to pay for this, you know, supposed wall that Trump wants to put up, well, if it keeps going at the rate that they're going, right, they're going to lose a ton of money because the currency, their currency compared to the dollar, what they would get out of it would be nothing, literally nothing. They would lose billions and billions of dollars. So what does that mean? That means that in order for, if Mexico is going to pay, this needs to come down. So it can value more of their peso. So if they were to pay for it, they would get more value from it. Does that make sense, everybody? Cool. So with the peso right now, right, we're just looking at potentially trading it. First thing you should know about the peso is that it carries ridiculous high spreads most of the day, or most of the 24 hours. It carries some of the highest spreads ever. I believe, let me look right now, but right now the spread is 93 on it. And that's pretty low compared. But most of the time, it's like 150, 200, 300. Okay. What that means is that you're going to be down 200 pips from the get-go, off the bat, if the spread's that big, right? So if you're going to trade it, make sure that the spread is as low as possible. The lowest time for the spread on this one is potentially going to be during daytime throughout the week. And that's like 80, 70 max. So just keep that in mind before you start trading this. Okay. So the first thing I would do is, you know, you got your support and your resistance. We'll put one. It was here, I remember, from last time. There's another one here, another one there, and Get rid of ones that really don't matter right now. All right. So there's your support and your resistance for peso. All right, we have a trend line here, so we know that we're currently in a downtrend. Essentially, right now with this peso, what I would be waiting for is I'd be waiting for to see if this is going to be respected or if it's not going to be respected. If this trend line is going to be respected or not. So basically, I'm creating a wedge here and seeing what happens with price. Okay, is it going to respect the 200 EMA and that support? Okay, if it is going to respect it, then it's going to break that trend line and go back up, right? And the first thing that it has to go back up to is structure. Well, structure is in this area here, right? So we're looking for it to go back up to here if it goes back up. If it breaks that structure, then obviously the place for it to go would be here, right? So depending on how this wedge breaks, whether it's up or whether it's down, would be very important. Just know that if it breaks down, it's going to be a long way down because it really doesn't have a lot to go. It's essentially like USD Jappy. You know, it has these areas here, but I mean, if it's going to go down, the bank is going to drive it very back down. It's going to drive it deep down to make it as low as possible. You know, so essentially this right here would be more of a wait to see what happens. If you go through it on the 12-hour chart, you see here we don't have any candles that we could possibly use to trade. Here's a good example right here. So we have in this area here, we had what? Sellers in control. They got to support, and they had 20 hours of indecision right here until the next candle came out, and that's where the buyers took control of that price, right? So buyers took control of that price, and see if I can, what kind of range would have been here? So this potential trade would have given you 2-to-1 if you would have been, you know, obviously paying attention to it. And the only thing that we'd be interested in is when buyers took control of price. The only thing that they needed to do to take control of price here would have been to create a new high, passing all these two candles here, which would have been 20 hours of trading, right? So then our entry would have been right above the wick of those candles. And then our stop loss, we could bring up a lot and put it right below that bottom wick there, right? And then if we do that, we would have been, you know, so far we could have gotten at least almost a 3-to-1 risk to reward ratio on that. Almost, you know, 3-to-1. Right now, if we look to the left, we do see, right, price does struggle in this area here, right? So if you wanted to be safe, right, and just get it to these areas here, you're still looking at a 1 to 8 or 1 to 1.5, 1 to almost 2 still in this area, depending on where you take it, right? And even if you take it, let's say if you would have taken it here, you would have gotten just a little bit over a 1-to-1 risk reward. Okay, but that would have been the better trade there, obviously. Does that make sense to everybody? It's very important to go through the different time frames, starting from the daily and just work your way back and just see what time frame gives you the best possible setup. You know, just go through the different time frames. Here's 6 hour, another good setup here, and it would have been a lot more clear here as well, because you have, 6, 12, 18 hours before the buyers took control. Now, when you look at it here, though, this area, this problem area is more defined, right? So if you're looking at getting into that trade, let's say on a 6 hour frame, I mean, you're essentially looking at a 1-to-1 there and a 2-to-1 to try to make it up to resistance, right? Which if it works out to be that way, I mean, you're pretty much going with it going to that trend line as well, and then coming back down. So when all this matches like this, you have your trend line, you have your resistance, and you literally have a 2-to-1, and it hits both the resistance and the trend line at the same time. I mean, those are pretty good things to look at when getting into a trade, if you can match all that up. So, any questions on that? Any questions at all? Everybody feel comfortable with what I've talked about these past 3 days, understanding everything, or have any other questions at all? Correct. Yes. Just need to practice. Definitely. Get a demo account. Please get a demo account. Don't start trading this live. Practice it on a demo account first. If you can't be profitable on a demo account, then you can't be profitable in a live account. So make sure that you open up a demo account and practice it on a demo account. Try to get with a broker that allows you to change the amount that you can have in your demo account, so you can potentially trade the same amount that you would in a live account. So some brokers allow you to do like a $500 demo account or $3,000 demo account, whatever the case may be, and just trade it like you were trading it your real account. Don't start trading it like 10 lots, and then you're making, you get one good trade and you make $20,000 in one good trade, and you're like, yes, I'm ready for live. It doesn't work that way, because you're not going to be trading 10 lots on a live account. So get a demo account and trade it. Treat that demo account as if it was your live account. Use the same lot sizes that you would use as your live account. So if you know that you're going to have, $500, $400, you know what the lot sizes that you can use on those particular trades, and just practice with that. Know that you're going to lose trades. Know that you're going to blow accounts. It's going to happen. Accept the fact that you're going to blow an account, because it's going to happen. Everybody blows their accounts when they first start. So it's going to happen. Don't let any of that discourage you. You can truly do anything you want to do with Forex. If you take the time to learn it, study it, you can make really good money with this. But you have to treat it like a business. You can't treat it like a hobby. If you have a job, then trade after your job. The best thing about Forex is that it's open 24 hours a day, 5 days a week, or 6 days a week. So it's not like the stock market where you're done at 4 or 5. You have 24 hours to trade. You can trade during the Asian session. You can trade during the London session. You can trade during the New York session. So the opportunities to trade are there, so not having, the time to trade is just really an excuse, because there's always time to trade. The hour that you're watching, I don't know, a show that you like, take that hour and instead of watching the show, analyze charts, put in a couple trades. If you can't look at charts all day, cool. Trade on a higher time frame. Trade on a 12-hour, 10-hour time frame. Guess what? You put in a trade. Guess what? The next candle isn't going to do until 12 hours from now. So you have 12 hours to do whatever. If you're really busy, then you should be trading on the higher time frames, because that way you're not having to focus, a couple of hours on the charts. So you just need to check the charts every so often, depending on where you're trading from. If you're trading on a 10-hour chart, then guess what? Every 10 hours, you just need to check the charts real quick. See what that candle produced. See if it's up or down. See if it's going the way that you want it to. So it's definitely very doable. It is something that can be done. It's just up to that person to decide to do it. And if you do it, you get really good at it, it could potentially, replace your income. And it has the potential to, free up a lot of things that you would like to have. But you just got to put in the work first. It's not going to be something that's easy, that's free, and stuff like that. It takes time. It takes a lot of work to get it done. So if any of you would like any help, just reach out to me on Facebook. Again, anything that I can help you with, just reach out to me, and I'll be more than happy to help you. Okay? Don't be scared to ask, even if it's a stupid question. There's nothing out of a stupid question in the Forex market, because it's pertaining to money. So thank you guys for your time, and enjoy the rest of your weekend, and enjoy the rest of your week. All right, guys.